This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Heidi Stroud-Watts in Sydney. The top stories this hour. Asian equities are set to open higher after Wall Street gained on optimism of more peace talks between the US and Iran. The S&P 500 rallies to near fresh record, while WTI steadies in early trade. Sources say Washington and Tehran are looking to arrange another round of discussions before the current ceasefire expires next week. And bank executives warn an extended conflict could blunt deal activity, even as trading desks notch record revenue for the first quarter.
Well, it looks like this risk rally continues to build, given how the worst-case scenario worries for the war seem to be fading for markets, at least. We saw the S&P 500 erasing losses since the conflict began, and it was at one point in the session in sight of a fresh record. The Nasdaq on a 10th day of gains, which in itself is a pretty good indicator of continued momentum. We saw a rotation back into growth stocks. Volatility is receding, by the way, and it's not just for US equities. You take a look at this chart, you're seeing that for Euro as well as the Japanese stocks indices, and all this could help to support further equities gains. All in, it's a good setup for Asia, especially tech that was already bouncing yesterday. We're seeing Korea futures pointing to a great day for the Kospi, led potentially by tech yet again. Keep note of how the Kospi and the Nikkei have already erased the losses since the war began, so higher since the late days of February or early March. We're also watching dollar-yen, given sources saying that the BOJ is mulling sharply raising its inflation forecast. Heidi?
Yeah, Avril, it is really down to the sort of steadying that we've seen in oil prices as well. Right? That's really underpinning this return of the relief rally. And you are right, it is about perhaps less on the optimism and more about fading at least the worst case scenarios when it comes to outcomes for the markets as a result of this war. Take a look at what we're watching when it comes to New York traded crude. We are seeing a little bit of upside, about 0.7% after holding a drop for most of that session. We're hearing that the US and Iran looking to arrange that second round of peace talks. Of course, we're also watching gold, which is pretty flat at the moment. We did see some gains after 2 days of declines, but spot gold trading a little bit softer at the moment. Looking ahead to some modest gains as we get into the start of trading in Sydney in the next hour. BHP, I should note, is one that we will be watching closely in non-related to the war news. China's state-backed iron ore buyer telling several steel mills that they're allowed to purchase some BHP Group cargo. So there's been a months-long commercial dispute that could be signs of some sort of softening in that position. But let's get back to our top story that's driving markets, and sources say the US and Iran are looking to arrange that second round of talks in the coming days. They say the plan is to hold more discussions before the current ceasefire expires next week. For more on this, let's bring our Washington and White House correspondent, Jeff Mason. Our oil and shipping reporter, Willen Soon, joins us as well. Jeff, let me start off with you. What developments there on the ground are giving rise to this kind of cautious optimism, or at least the expectation that the worst case scenario may not play out?
Well, I think the developments are simply that the U.S. and Iran are open to talking again, and that they are making efforts to put together another round of talks. President Trump said in an interview that those talks could take place in Islamabad again, where they took place last weekend. That last round of talks in Islamabad did not end with a peace agreement, but the fact that they are looking at getting together again is creating optimism, certainly in the markets and among others who are hoping to see an end to this war, that they can come up with a deal.
On those potential talks, to what extent does that need to come with Iran essentially stopping that shipping through the strait in order not to derail the prospects of these talks?
Well, there are multiple issues that would be discussed at the talks and multiple issues that are hanging over them. Certainly the strait is one of them, and you're right to bring it up. The president said after the talks concluded or failed over the weekend that the U.S. would start a blockade of the strait. That's something that he's committed to, and it's another one of the things that he has wielded as his own sort of threats to Iran, along with that 2-week pause, the threat coming after that 2-week pause, I should say, of restarting attacks against the country. So, you know, that's got to be on the top of mind amongst Iranians, just as it is here. The other main thing that the president has said repeatedly over and over again is that talks need to lead to the Iranians agreeing not to pursue a nuclear weapon. And that's just not something that so far they've agreed or been willing to agree to.
Well, and at this point, this full naval blockage of Iranian vessels, are we seeing the impact of that? Do we have any further intel in terms of how this is playing out?
So I think what we saw overnight is that the U.S. Central Command has said that 6 merchant ships have agreed to, or rather responded to the blockade and turned around and going back to the Iranian port. And I think at the same time, as we mentioned just now, Iran is planning to not send ships through Hormuz. So while the U.S. blockade did throw a level of uncertainty into the whole situation, but it appears to be more stable than we feared that it would might be. So the potential escalation appears to be drawing a line over there with the turnaround of the ships. And so far, I think through the Strait of Hormuz, traffic is still low, but the situation doesn't appear to be escalating on either side.
So what are we expecting, Wei Lun, to see on oil prices, given how there seems to be the disconnect still between futures and the physical market?
Yeah, right. So for futures markets, the prices appear to have come down east of a little bit. And these are really traders trading on ceasefire headlines, news headlines. So any potential indications of Tehran and Washington going into talks buys them some time to think about future supply issues. And it appears to be going in the right direction. But I mean, on the ground, physically, you see like dated Brent, which is a proxy for physical crude prices. They are still climbing. And yesterday, the IEA president, he did mention that there's a disconnect between the futures and the physical market. And very soon, we think as the longer the closure of the Strait of Hormuz goes on, the more physical barrels would disappear from the market. And then we're headed for a lower demand for global oil across the world. And this is where we see the futures and the physical market coming together in terms of prices.
Jeff, I am wondering how much internal pressure the president is under, both from the rest of the GOP and also his base, right? We're seeing that gas pump prices are at all-time seasonal highs just ahead of the summer driving season. He's, of course, dealt with the backlash over that AI-generated image depicting himself as a Jesus-like figure. How much pressure is there in a year of midterms for him to come to a resolution that he can call a win in these negotiations?
Well, he certainly drew some criticism for that Christ-like portrayal or that Christ-like picture of himself that he posted, which he ended up deleting. But I would say that the first point that you made about gas prices is probably what's putting more pressure on him than that. The fact that Americans are still paying more than $4 a gallon for gas in many parts of the U.S., that is a huge political risk for him going into the midterm elections in November, because voters here absolutely consider their pocketbooks when they decide who they're going to vote for. And if Republicans do not maintain their control over one or both houses of Congress, that's going to change President Trump's presidency in the last 2 years of this term. So yes, I think he does feel under pressure. That said, this is a president who doesn't necessarily make decisions based on that. He launched this war and seems committed, at least for now, to trying to get the resolution that he's been calling for. We'll just see if those talks end up happening as another round and whether or not they're able to come up with an agreement.
Our Bloomberg Washington and White House correspondent Jeff Mason and our oil and shipping reporter Wei Lun Sun, thank you to you both. Now, of course, as we highlighted, stocks in Asia poised to open higher after the S&P rallied to a fresh record, and tech stocks are in focus across Asia, given how investors have been piling into the sector as part of perhaps a risk-on trade. Let's bring in our executive editor for Asia Markets, Paul Dobson. So, Paul, what do you make of these moves? Is it risk-on? Is it complacency? What is the momentum coming from?
Yeah, well, it certainly is a rapid snapback that we've seen across equity markets, particularly in the developed world, led by the US and also by the tech-heavy Asia names. And it may seem a little bit on the reckless side, given the fact that we do have the higher energy costs and the drag that's going to create on the global economy. I think for the US markets in particular, it's well supplied with energy, and in fact, being a net exporter can actually play in its favor to a certain extent once that sort of uncertainty over the war does dissipate, assuming that there is some progress in the peace talks coming up. I think that the other thing is the market has been, twitching and wanting to buy the dip in the equities market all the way through this crisis. We didn't see a particularly heavy sell-off even at the peak of the sort of conflict, and that sort of tells you that the market is tapping into the fact that there's economic resilience, that the company earnings are looking reasonably good, that all of the Trump stimulus measures that came in this year, lower taxes and so on and so forth, is also propelling markets higher. I think for Asia, it's not a completely clear-cut story, right? Yes, some of those tech-heavy gauges, particularly Taiwan, which we saw yesterday reaching a record high, South Korea, Japan in the ascendancy, but some of the emerging market gauges, particularly countries that are energy importers, are lagging a long way behind. So if you look at Indonesia, Philippines, India, they're still a long way from recovering from the losses that they incurred since the war started.
Yeah, to your point, to what extent does this speak to the AI comeback and the extent that we're seeing dispersion in tech, even in the US?
So that's definitely a theme as well, coming back into it. We have seen more models rolling out, the prospect of that figuring out. And I think the funding market stresses maybe not developing into anything worse so far. So that side of the equation, the how are we going to pay for it all, seems to have just, ebbed a little bit, gone away from the conversation somewhat, and people focusing on the upside and the developments, again, the opportunities there a little bit more. We've seen some more of those internecine deals that are sort of creating that spider's web of networks. But I think we'll get those earnings coming through from those companies in the next few weeks, and that will be something that the market will want to be paying attention to really understand the opportunities next year.
That broad fall that we see in cross-asset volatility, how clear is the path now for a more sustained rally? Is this a case of the market really having priced out a worst-case scenario, even if not much progress is being made in these peace talks? At least there are still talks ongoing?
It definitely feels that way, Heidi. I feel like, this is the easiest story that we've had to tell over recent weeks. But what you're saying is absolutely right. We're still a long way from any actual concrete agreement. What we are seeing is that the ceasefire so far is holding. The talks between Israel and Lebanon also a positive, signaling maybe that there's a will now to get something done, some momentum to find some sort of a deal. We do know, of course, that in terms of the physical oil market, there are all of those laden tankers just waiting to get out of the Strait of Hormuz and go and supply the global market again. But there is going to be that gap in between, right? The last ships have started to arrive in port from before the closure of the Strait of Hormuz, and so we are going to be, running on fumes a little bit until we can get more supply into the market. So there is still a race against time, and particularly for those economies that are struggling more with their imports in our part of the world. And that is something that investors are going to have to continue to keep in mind.
Yeah, and it's going to be top of mind still for central bankers, in spite of the wins that we're seeing in the market. So how should we be viewing this, especially when you have some sense that the BOJ maybe will sharply increase their inflation forecast, but the IMF also thinks that major central banks, maybe they don't have to hike. How should we be viewing this in the context of market moves?
Yeah, I think different central bankers may respond in different ways, but talking about the BOJ specifically, yes, they raised their inflation forecast. They also lowered their growth forecast at the same time, and we didn't get from Ueda most recently in the comments that we heard from him any really strong sort of signal that they're ready to go. So it seems like there's going to be quite a strong debate in the BOJ this time, the possibility for a split vote maybe when we do get a decision. But the fact is, they're telling us that they're on a hiking path and the inflation rate is rising as well, so they will need to respond to that at some point in the year. So if it's not a hike in the next meeting, then the market will still expect that they will move in at some point before too long. What I think is really interesting is the Fed now. Where do they go from here? The market went quite far in pricing out the possibility of any cuts. It came back again. We swung backwards and forwards. I think we're basically flatlining for the year at the moment in terms of market expectations. If the oil price does sustainably come down and that does reduce those inflation expectations, then do people start to think again that the Fed will be able to lower interest rates by the end of the year? And does that help the bonds market, which so far hasn't quite recovered the way the equity market has?
Our executive editor for Asia Markets, Paul Dobson. One space we'll be watching is really tech stocks. Really strong momentum coming from the overnight session. We're seeing that pricing in Hynix, just one indication of that. But this is the Korea tech segment pre-markets look there. You're seeing a boost when it comes to Samsung as well, that we're expecting strong earnings, certainly helping that broader shift. We saw Samsung reporting that 8-fold jump in quarterly profit. The robustness of AI-driven demand is still there. TSMC is this week as well. Thursday will be the next big test that we're watching. Citigroup, for one, expecting the AI-related revenue to more than double. So that rebound in the strength that we're seeing in chip stocks is really helping uplift sentiment for this region in particular. So one to watch. We also had an upgrade for SK Hynix as well from BOCOM and expectations of potential for more. Coming up on the Asia Trade, we'll have more analysis on potential talks between Washington and Iran with the former US official, Mara Rudman. We'll also be live from the HSBC Global Investment Summit in Hong Kong. Today, our exclusive interview with the private banking CEO comes up in the next hour. This is Bloomberg.
The impact of the Middle East conflict is hitting Asia and Europe harder than countries such as the US and Brazil, which are more insulated from energy shocks. Clearly, the longer this goes on, the more pronounced the second or third order impacts are going to be around the world. And inflation is now a greater risk to growth and will likely cause central banks to lean towards more restrictive monetary policies.
Citigroup CEO Jane Fraser. Now, executives at JP Morgan and Wells Fargo are also warning that an extended conflict in Iran risks blunting deal activity. That's even as Wall Street trading banks notched record revenue for the first quarter as clients navigated the geopolitical turmoil. Herman Chan is a U.S. banking and financial senior analyst with Bloomberg Intelligence, and he joins us now. So, Herman, we are seeing record trading revenue thanks to the volatility, but investors seem a bit more preoccupied by how this could affect, how the war could affect some other parts of these businesses for the lenders. What's your read into this?
Yeah, that's right. So we did have really strong trading results from JP Morgan, Citigroup, and Wells Fargo, both on the equity side and the fixed income side. Note that yesterday, Goldman Sachs did disappoint a bit on the fixed income side. So it did look like that was really specific to that firm rather than the entire group. That being said, there is still some caution up from the U.S. banks in terms of where the economic backdrop will develop. In the meantime, there is the commentary from the banks that the economy in the U.S. is very resilient. You've seen that in the loan growth that was occurring in the first quarter and stable credit quality. But there's still uncertainty ahead in terms of where the deal pipeline occurs, and the volatility that you mentioned could affect areas like M&A and IPO activity for the U.S.
We talked yesterday with the Goldman numbers that the uplift, whilst truly impressive in some segments, was sort of uneven, right? Where are the weaknesses and where is that volatility going to play out to the downside? And did we see any commentary about some of the other broader risks like private credit?
Right. You mentioned private credit. That was something that was top of mind for the analysts that were asking questions on the earnings calls. All three banks that reported, JP Morgan, Citigroup, and Wells Fargo, articulated their exposures to private credit in particular. That being said, they were very sanguine about the upcoming turn in the credit cycle and the relative insulation of these banks from losses from their private credit exposures. They talked about attachment rates that look very conservative, not going to see sizable losses from the portfolios, even though there are questions on AI disruption on the private credit investments themselves. And so we'll see how that plays out, but the banks are very, very optimistic that their exposure to private credit can help hold up in a potential recessionary environment.
Herman, at the same time, there are some idiosyncrasies among the lenders. For Citi, the revamp looks like it's taking hold. What's next for them?
Right. So you mentioned the transformation of the company. The management team articulated that it's about 90% complete. Relative to the fourth quarter, they said it was 80%. So they're slowly inching up to make that resolution finished. That being said, a lot of the timetable that remains is dependent on the U.S. regulators to bless them from removal of these regulations that are specific to Citi. I would say that there is a lot of optimism for Citi in terms of what they produced in the first quarter, 13% return on tangible equity. That's relative to the 10 to 11% ROTCE that they're expecting for the full year. So great start to the year, and we'd expect positive commentary from management at the upcoming Investor Day next month, where they'll likely lay out improved long-term return guidance for the street.
Our US banking and financial senior analyst with Bloomberg Intelligence, Herman Chan, there with the latest commentary and the numbers from the big US banks. More ahead on the Asia trade. This is Bloomberg.
The world is beset by turmoil and the international order is in disarray. How a country treats the international law and order reflects its worldview, its values, its vision of order, and its sense of responsibility.
Chinese President Xi Jinping there speaking in Beijing. Well, the International Monetary Fund has downgraded its growth projection for this year after the Iran war triggered a major oil shock. The fund now expects global growth to rise 3.1% this year, down from its January forecast of 3.3%. The IMF says the latest estimate assumes the conflict will be relatively short-lived and that energy prices will see only a moderate increase this year.
The closing of the Strait of Hormuz and serious damage to critical energy facilities in the Middle East raise the prospect of a major energy crisis should a durable solution not be found soon. Oil and gas prices have increased sharply, and so have the prices of diesel and jet fuel, fertilizer, aluminum, and helium. With the right policies, including a swift cessation of hostilities and reopening of the Strait of Hormuz, the damage can remain limited.
As central banks around the world keep tabs on the Iran war, we are, of course, seeing the Bloomberg Dollar Index on an 8th day of a decline. And against this backdrop, the concerns about the Bank of Japan having to perhaps sharply increase their inflation forecast, that helped nudge the yen a bit stronger in the past 24 hours or so. Keeping watch on the Korean won as well. We did get some of these data points in the form of Korea's jobless rate, and it came in lower than expected, so maybe easing some concerns of the second-order effects from the war. Of course, also watching the reaction continuing today as the pension fund in the country expands currency hedging to bolster the local currency. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at the setup as we head into the Asian session. Cash trading beginning in just the top of the hour. We are expecting a bit of upside. It does feel like the drop in cross-asset volatility, the moderation that we've seen in oil prices, all of this perhaps fading that worst-case scenario, if not also looking towards a little bit more optimism with another round of discussions apparently looking to take place before we get to that ceasefire deadline expiring. We're seeing Sydney futures modestly higher there. watching BHP with some development on a commercial disagreement with Chinese buyers. The Nikkei 225 looking like we'll see some gains alongside the Kospi, given the strength that we've seen in that tech rally in particular. Let's bring in now Mara Rudman, who's a practitioner, senior fellow at the Miller Center for the University of Virginia. She was also a former US State Department deputy envoy for Middle East peace. We are hearing from an interview with Fox News, President Trump saying that he sees the view as very close to being over. We would hope that he's right, but do you think that the two sides are any closer, given that the failed talks in Islamabad seem to hinge on some pretty big gaps in terms of what Tehran and what Washington want?
So I hope he is right. I hope we are closer. It would not be surprising that one marathon 21-hour session that did not have a lot of prep time leading up to it was not successful. It could be a building block for further conversation, and that appears to be what's going on. That's certainly what's been leaked out in various ways. For example, the gap between a commitment on 3 to 5 years of no nuclear program versus what the United States was supposedly asking for, which was 20 years. So there's room there to get to agreement. Also, the talks that Israel's having with Lebanon, not enough, but a start. Looks to be an attempt to get us closer to reaching agreement, but we've been here before and not been able to close the deal.
Do you see the potential for major compromises on either side? We know that for Iran's side, the naval blockade is obviously going to have significant economic consequences if it continues, but we also have talked about in the past about this being a regime that's built and now doubled down for survival. Are they likely to let go of these nuclear ambitions?
No, they're not likely to let go of them entirely. It seems, again, if the reporting is correct, that what the Trump team was asking for was not a forever commitment. It was a generational commitment of 20 years, but Iran might well see that as a negotiating position. In terms of compromise, to get to any kind of deal in every negotiation, both sides need to give, and both sides need to feel like they've gotten something from the deal, the agreement in the end. And I would expect that dynamic is at play. As you noted, Iran has already showed that they really, they've had a lot of experience in asymmetric warfare, and they're continuing to use that to their advantage. And even what's happening in the Strait of Hormuz is not entirely clear in terms of what the United States is able to stop, what Iran is doing there, and the risk of greater confrontation is high.
What about if any third parties can spur a bit of compromise for either the US or the Iran side? For the Saudis, for example, do you think they play a role in some ways, given how they also want the US to perhaps end this blockade?
So, again, reporting on where the Saudis are on any given point since this conflict began has not been entirely clear. So I'm not sure on that. I would expect that there are a number of different international actors and actors in the region, including the Saudis, who are talking to President Trump and the people around him. Right now, we're in the very odd dynamic, though, of Pakistan and China being the two countries that seem to be in the position of maximizing work toward getting to an agreement, which for the United States has got to be or ought to be a fairly uncomfortable position to be in.
How do you think Trump is viewing this at this stage? I mean, at a time where he's meeting as well the U.S. ambassador to China, how do you think he's going to be framing this? Perhaps also not just in the context of the war, but as the tariff ructions roil on in the background.
Yeah, well, it's a good question, but I think trying to anticipate what is going on in President Trump's mind at any given moment is something of a fool's errand. So I'm not going to try to do that. But I think what he may try to say is he's going to paint wherever we are when he is going into the meeting with Xi as a win, as a victory for the United States. By we, I mean the United States. And he will wrap whatever set of facts he has, or he'll reshape facts to where they can support an argument that the United States has done well. in terms of starting this conflict and whether or not it's brought to an end by the time he's meeting with Xi.
Mara, one of the other sticking points is the inclusion or exclusion of Iranian proxies, right? Pakistan certainly thought that they were included. Iran would be arguing otherwise. We're also seeing that talks are starting to get underway between Israel and Lebanon on Hezbollah. Hezbollah are not actually invited to those meetings. How fruitful do you think those discussions will be? And I guess by extension, how closely aligned are Israel and the US right now in terms of their peace objectives?
So as I have seen it from the beginning of this conflict, while the United States and Israel have worked together militarily very clearly, I'm not sure that the ultimate goals were ever completely aligned. And so that tension has probably increased. But I don't think we were perfectly aligned from the beginning. In terms of Israel talking to Lebanon, listen, I think almost any time when two parties who have not had diplomatic relations with each other are in conversation, that is a good thing. When tension, and particularly so when there's the kind of conflict going on that there is now. The problem is, as you've noted, that the government of Lebanon does not have control over Hezbollah, has not for some time, or Hezbollah's actions. And so at some point, dealing with what it will take to shut down Hezbollah's actions against Israel in a way that Israel is comfortable with, to then also scale back Israel's actions in Lebanon, is going to be critical. And that's not something that the government of Lebanon itself can do.
As one of our other guests, Joseph Dyer, said, starting negotiations, getting to a peace deal, very different things. If the regime stays intact in its current form and leadership in Iran, can you see a region where these proxies, where Hezbollah give up arms?
With the regime intact, they're going to continue, the regime in Iran, they will continue to look for every opportunity they have to have an asymmetric advantage. And the use of proxies, whether it's the Houthis in Yemen or Hezbollah in Lebanon, is part of that. One question would be whether you can significantly degrade, and I believe that has happened to a large extent, the strength of those proxies. That certainly happened in terms of Hezbollah, I think with the Houthis some, but it's less clear. So in a similar way to, if you can get them to freeze and no longer, for a period of time, their use of any kind of nuclear program in Iran, that's a plus. If you, with the degrading of the ability to use militias like Hezbollah, that's a plus for the rest of the world. The question is what the period of time is and what happens next, which is also, honestly, with Hezbollah, part of the argument for trying to do things that would strengthen the government of Lebanon, the current government of Lebanon, and strengthen their ability to ultimately work to sideline, to shut down Hezbollah.
Mara, always good to have you on the program. Thanks so much. Mara Rudman is practitioner, senior fellow at the Miller Center at the University of Virginia. And you can also explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. We have more ahead on the Asia trade. This is Bloomberg. Markets in Japan open at the top of the next hour. We're expecting that tailwind from the U.S. handover. Tech should be doing fairly well today, and we're watching dollar-yen as well, given what we're hearing about the Bank of Japan officials reportedly, according to sources speaking to Bloomberg, considering raising their inflation forecast at this month's policy meeting after the surge in oil prices. And our Tokyo economy and government reporter, Erika Yokoyama, joins us now. Erika, the BOJ is said to raise its inflation forecast and perhaps quite sharply at that. Is this a surprise in any way, though?
Well, I feel like this would be a very natural move for the BOJ given the current condition. People said this is largely driven by the rising oil prices linked to ongoing tension in the Middle East. And, Japan is particularly exposed because it imports about 90% of oil from the Middle East, with much of it passing through the Strait of Hormuz. In fact, oil prices have risen roughly 50% since the US-Iran conflict began, leading to inflation in variety of items from fuel to oil-related products. And on top of that, the yen remains weak, hovering near 160 per dollar level, which is further fueling import-driven inflation as well. The BOJ currently sees key inflation gauge at around 1.9% for the current year, but that is now expected to move above its BOJ's 2% target. At the same time, it's interesting the BOJ is also set to consider revising down its growth outlook, reflecting economic headwinds. So it's kind of like a stagflation-like dynamic.
The signaling, does it back a potential hike in April?
No, I don't really think so, because the latest signal came from the Governor Ueda's speech on Monday, where he emphasized uncertainty over how the geopolitical uncertainty evolves in lately. The backdrop looks somewhat kind of similar to last year when the BOJ paused tightening due to uncertainty over U.S. tariff. So Ueda's comments on Monday have cool down expectation for an April rate hike. Overnight index swap now implies about 40% chance of an April hike, sharply down from over 60% earlier this month. But still, Ueda has kept open door for the rate hike in April as well by citing both sides of risk, upside and downside risk to underlying inflation as well. So Ueda is now in Washington, D.C. He has a press conferences later this week. We're probably going to see more hints there.
We're also hearing from the IMF on Japan in its latest outlook. How is it viewing the economy, the BOJ's path?
I was actually pretty surprised because, IMF was seeing Japan's economy very solid compared to the other economies. The IMF downgraded growth forecast for almost all the economy, but for Japan, it didn't change the outlook. It said solid domestic consumptions and government measures are helping offset Middle East impact. And on monetary policy front, that's also interesting. It says the IMF expects the BOJ policy rate to rise gradually on a slightly steeper path than it's projected before in October. So I think that's kind of encouraging for BOJ as it considers the further rate hike. But at the same time, we also heard from IMF chief economist today that central banks, including the Bank of Japan, do not need to rush into rate hike as they can afford to wait amid uncertainty. So there are still divergent views on how quickly the central bank should move, with similar division emerging among the domestic BOJ watchers.
Bloomberg Tokyo economy and government reporter Erika Yokoyama there in Washington. Meanwhile, the ECB President Christine Lagarde says reaching a settlement to the war is in the best interest of the global economy. In an exclusive interview with Bloomberg, Lagarde also discussed how the prolonged conflict has weighed on her outlook for growth and inflation.
I have seen successful program being completely wiped out by war. So war is, in any circumstances, the worst outcome. If you talk in strict economic terms and the movement of goods and all that, it's the Strait of Hormuz not being open for shipping and transportation, because you have 20% of gas and oil going through that, as well as the like of ingredients necessary for fertilizers, ingredients necessary for microchips, and what have you, not going through the strait.
So what's the pain threshold for the euro area economy that the ECB would have to act on? Is it inflation at 3-4%, or is it?
Look, we have forecasts for inflation that vary between 2.6, which is the baseline that we have, and a little north of 4%. Based on what I told you earlier, which is see-through, strong, decisive reaction, or somewhere in between, depending on the factors that we see, we will adjust. Because we will be agile, but one thing for sure is that we will keep our 2%.
Madame Lagarde, how worried are you about the discrepancy between spot and future oil prices, and so potentially tighter markets that we're pricing in?
I think it's the whole dilemma that we have about short term and medium term. And you know, the more anxious and worried economic actors are about the resolution of this crisis, the more pressure there will be on the spot market.
How much do you blame the U.S. administration for what's happening to the European economy?
You know, it's not my job to do, you know, blame, to point finger or to associate this or that with blame. I'm more in the hope section myself, and I very much hope that people can sit at the table, can come to their sense, and understand that it will be in the best interest of the global economy, of the people, that a war settlement is reached, and that not just a ceasefire, and that we can navigate through the straits of the world.
ECB President Christine Lagarde speaking exclusively with Bloomberg's Francine Lacroix in Washington. More hit on the Asia trade. This is Bloomberg.
All right, let's get a look at some of the latest data when it comes to core machine orders just crossing the Bloomberg at the moment, as we're still seeing sort of that signaling towards what the Bank of Japan do at its April meeting. They're said to be mulling raising the price outlook, at least on the escalation in oil prices. February core machine orders rising 13.6% month on month. That is a big beat on expectations of an over 1% contraction. On a year-on-year basis, we're seeing a gain of 24.7% for core machine orders against an estimate of 8.1% for the month of February there. So pretty big beat there when it comes to expectations. This as we continue to see the machine tool orders cycle rise, and that cycle really suggesting that we're seeing perhaps that maturation of the of this growth cycle as well. We've had a pretty solid start in 2026. A lot of the orders coming through when it comes to China, North America, but also a broader recovery at home as well. Bloomberg Intelligence saying that this looks like a more mature cycle, and overseas demand remains a key driver, but there is a caveat that there is that risk of exposure from any oil shock led by a capex slowdown. Well, of course, all of that pointing back to the ongoing conflict in the Middle East, looming large over the HSBC's Global Investment Summit in Hong Kong as well. The China Show's co-anchor David Lengus is at the event and joins us now. Dave.
Yeah, good morning. It's certainly, it's day two, but it is certainly a continuation of the conversations we had yesterday. In fact, just to give you a sense of some of the big interviews we have coming up here on shows, we will be having, of course, the head of HSBC's Asia and Middle East. That's one person. That's David Liao will be joining us in about 90, give or take 90 minutes from now. So that's really an interesting perspective, because it's really what we're seeing as far as two things, right? Wealth flows, are they seeing more than simply inquiries in terms of fund flows from the Middle East into the Asia Pacific? That's really one of the perfect people to speak to, given that unique perspective of him overseeing both. The other thing I want to bring up alongside David Liao is, of course, his perspective as it pertains to global trade flows, because they are, of course, a payments facilitator is a very simple way of describing that. I had a fireside chat with George El-Hedri yesterday, and one of the things he brought up was that the war has, while it's perhaps on the mend, and we'll see how long that off-ramp will be, we've been in this for the better part of, 8 weeks now, and for the foreseeable future and as far as the coming weeks. So it started to show up, George said, in the form of confidence, right? So we'll see how the iteration of that here in these conversations. So we have 9 interviews coming up here at the HSBC conference. In the next hour, we'll be joined by Ida Liu, of course, who heads the private bank for HSBC. So we'll see whether or not, along the wealth flows conversation, we'll see what we hear from her. And of course, we're talking all things AI with Perplexity. Yeah, and I'm sure a lot of folks are going to be tuned in for this, given, of course, some of the disruptions, the constant fundraising, valuations, and what they will need in as far as material. What does the world need to supply in a world where Perplexity will be correct? This vision for this refresh of search is coming up. So on top of all those things, lots more coming up here. And just to top things off, in about 3 hours from now, Ken Wilgoff out of Harvard, former out of the IMF, will also be helping us understand what the macro conversation is, right? Energy shock, and do we need to really, really get our heads around the prospects, not just tail, but perhaps a base case of stagflation in many parts of the world. Back to you guys.
Yeah. Dave, there's going to be quite a lineup. Looking forward to those conversations today. Bloomberg China Show co-anchor David Ingles from the HSBC Global Investment Summit in Hong Kong. Now to the latest from the corporate front. Alibaba planning to unveil its first robot soon in a bid to break into an increasingly crowded market. A spokesperson says this will be a four-legged device that will compete with the likes of Unitri's Go series, but it's unclear if Alibaba intends to sell this robot. Humanoids is a segment that has captured the Chinese consumer imagination in recent years. Shares of design software companies Adobe and Figma closed lower after a report that Anthropic was preparing its next flagship model, along with a new AI-powered tool for designing websites and presentations. According to the information, Cloud Opus 4.7 could be released as soon as this week. OpenAI letting a select group of users access a new AI model that's meant to be more adept at spotting software security vulnerabilities. It comes a week after rival Anthropic announced a limited release of a tool called Mythos. There are growing concerns about AI being misused by criminals and state-backed hackers as more companies push to develop more advanced models. Heidi.
Take a look, Avro, at how we're setting up just minutes away from the start of trading now in Japan, South Korea and Australia, all looking broadly positive. In particular, when it comes to Japan and South Korea, we're expecting a pop on the really strong momentum that we continue to see in trading in tech stocks. Samsung, Hynix, a couple of upgrades there are in the mix as well, adding to that uplift. We're seeing Kospi futures up by 3.5%. More modest here in Sydney, keeping an eye on BHP, though, with a resolution potentially of a commercial disagreement. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And of course, Heidi, given the handover from Wall Street, it looks like markets are pretty determined to look past the geopolitical uncertainty, or at least the worst case scenario when it comes to the war. They're focused on the opportunities. We're watching tech today.
Yeah, the reasoning is quite interesting, isn't it? Because it seems like we've got market participants sort of ring-fencing the risk of a singular oil shock as opposed to crossing over to secondary, third-level effects, which has been the economists' view going into inflation, stagflation risk scenarios. That's not really in play at the moment if you take a look at the broad fall that we're seeing across asset volatility.
Yeah, that is a level of supportiveness that we can expect, I guess, for Japanese equities as well, given vols have also fallen away in that market. We're ticking a bit higher after yesterday, already seeing a fair bit of green. Tech is looking like the supportive sector for today. We're also watching some of these central bank cues, as sources told Bloomberg that the BOJ could be looking to sharply increase its inflation forecast. Perhaps not a surprise to anyone given the way oil prices have surged, but that doesn't really move the needle just yet on the expectations that we'll see a hike from the BOJ at the end of the month. We are still looking at around 159, just below that on dollar yen. And against this backdrop, of course, we've been seeing the US dollar just slipping away. We did get a good 20-year auction yesterday. Today, you're seeing declines on the Japanese 10-year. Flip the board, take a look at South Korea, because to some extent, I think the AI, the tech trade, the comeback that they call it, maybe it didn't really go away. They're just finding new narratives for this. We are seeing some of the main Tech stocks, SK Hynix and Samsung Electronics, well in the green, adding on from what was already a good session yesterday. And of course, watching the Korean won as well as we get further signs of how the National Pension Service is likely to put steps in the way to help to support the currency as well, Heidi.
Take a look in terms of what we're watching. Of course, oil is really in focus as we have a pretty steadying picture there when it comes to oil prices. Just despite in the US, diesel, gas pump prices are at seasonal record highs just ahead of the summer driving season. There's that domestic pressure at play there, certainly. But we're also getting some sort of cross-current developments. The US easing sanctions against Venezuela's central bank. That should aid the oil revival for that economy. But we're also seeing a few more predictions. ANZ talking about a tiered recovery for the energy market in terms of supply in the Middle East, saying that these supplies in the region could see that tiered recovery path rather than a full reversal if we see the war conditions really stabilise. But if we also take a look at some of the other assets that we're watching, treasuries looking like gains that we have sort of oil falling in the wake of some PPI data there as well. So we are seeing volatility really kind of dropping more or less across the board, Avril.
Yeah, let's get more on these market moves. Bloomberg's executive editor for Asia markets, Paul Dobson, is with us. So early goings, it looks like quite a good setup for Asia today. What are you watching?
Yeah, definitely we'll be watching the tech stocks in particular. We'll be seeing whether more of those gauges in Asia will be able to erase the last of their losses that they were hit with since the start of the war in Iran. We saw that with Taiwan yesterday, where the market closed at a record high. And we heard from TSMC in recent days about just how its sales growth is continuing, and that's helping to fuel that momentum across the AI and the chips in our region. So markets that still haven't quite unwound those gains. Japan, I think, is 1.5% to 1.7% away from getting there. Some of the other markets are still trading a little bit further in the wake, though. I think what will be interesting to see is whether a gap widens between developed markets that are seeing those gains and some of the emerging markets that are energy importers, which have really been trading behind because they're likely to be hit disproportionately by the elevated costs and the reduced supplies of not only oil but natural gas as well. So I'm talking about India, talking about Indonesia, Philippines, maybe Thailand as well.
Paul, I wanted to kind of get your take on this reasoning, right? Because for the last 7 weeks, we've been talking about the pass-on effect of higher oil prices, the global shock to various economies, particularly in the Asia-Pacific, the primary, secondary, tertiary impact of this on inflation, on stagflation, on growth. And all of a sudden, the market thinking seems to have suggested that this is kind of a ring-fenced, isolated risk for oil markets. Can you kind of explain that to me? Because the idea that we haven't seen the pass-through yet, it seems like a little bit soon to make that call.
Well, I think that it was always the case that the market was assuming that it was going to be a relatively short-term blip. If you look at the longer-term prices at the back end of the energy curve, they didn't come up anywhere near as much as the very near-term prices. So you saw that gap between front-month crude and later maturities really blowing out. It tells you that there's an immediate shortage of energy, but over the longer term, the market is still expecting that supplies can come back on stream relatively quickly, assuming that the war does come to a swift end. We've been going for quite a long time now, taking the deliveries, walking through our inventories. We have had to call on emergency supplies in various places, and there have been more extreme responses to the energy supply crunch, 4-day working weeks across some of the emerging markets in our region. And we're starting to see little knock-on effects. For example, in Japan, we have these companies that are making bathroom sort of installations having to take no more new orders because they don't have the coatings that they need for some of their products. So little bits showing up. But on a macro level, not really that huge sort of fear of a sustained and long-term energy price shock. More something that, assuming that it is the Strait of Hormuz does open and supplies can get back into the market again, it is something that will be more of a speed bump, admittedly a pretty costly and brutal short-term impact, rather than something that's actually going to have a long-term bearing on the economy.
Which opens up the path for tech to continue or return to leading the way. How strong is that narrative?
Yeah, well, I mean, you see the Nasdaq is on, what, a 10-day winning streak, something like that. So that talks to that idea that there's still plenty of positive stories there, plenty of interest in buying the dip once investors assumed that the mood had shifted enough in the war, the momentum had shifted towards looking for peace. And I think for something like the memory chips in South Korea, you know, which we were talking about at the start of the hour, the demand is just super strong. There's no cancellations. They're basically sold out for the year and still looking to, you know, kind of figure out how much more demand there is beyond that, because people are still building the data centers in their droves. So from a technology point of view, people happy to jump back on the bandwagon, enjoying that sort of momentum trade.
That was Bloomberg's executive editor for Asia Markets, Paul Dobson, with us. Let's get some more when it comes to reports that the US and Iran are looking to arrange a second round of peace talks in the coming days. We've also learned that Taiwan is considering a short-term pause to shipments in the Strait of Hormuz to avoid testing a US blockade. For more, let's bring up Bloomberg Politics editor Laura Davidson. So despite the ongoing full naval blockade, the optimism still continues about the second round of talks. Are we going to see them go back to Pakistan? Do we have any sort of contours as to what these talks would be, and if you get to them with any level of agreed upon compromise ahead of time?
Yes, so there have been optimism for the past 24, 36 hours that a new round of talks could come together. Trump, in an interview with the New York Post, suggested it could be within a day or two. Other indications have been it would more likely be this weekend, Islamabad being one of the top sites to host again, where they were last weekend. The agenda for such a meeting is really how to extend this ceasefire. They're just up, if they meet either later this week or over the weekend, will be just days away from this current 14-day ceasefire expiring. So priority number one will basically just to buy more time to come up with some more fulsome comprehensive plans for what peace could look like. Though we are seeing some positive signs, both from Iran and from the U.S., that they're looking to sort of cool temperatures. Iran suggesting that they are not going to be sending any ships through the Strait of Hormuz to not test and potentially footfault or create any incident with the U.S. blockade. The U.S. blockade also seems to be a much more minimalist version of what Trump originally suggested it could be, with the U.S. military going after tankers on the high seas who have paid various tolls. Instead, they look to be keeping a very narrow focus on just ships that are coming to or from Iranian ports, and really taking a much more restrained approach. Trump has suggested that ships would be blown up. We haven't seen any of that yet.
Laura, given how we've been watching this war unfolding, the twists and turns, it's also something from the viewpoint of China. They're watching a world in disarray, as the Chinese president characterized it in comments to Pedro Sanchez, the Spanish prime minister, on Tuesday in Beijing. Take a listen.
The world is beset by turmoil, and the international order is in disarray. How a country treats the international law and order reflects its worldview, its values, its vision of order, and its sense of responsibility.
What's your read on how the White House is assessing the Chinese's global position amid this?
Yeah, so the White House is actually quite happy to let China play a leading role in putting pressure on Iran during these talks. That's a position that Trump is actually quite keen for China to do. However, this is maybe a little bit short-sighted, because this may give quite an opening for China to really play a leading role in the world, with the U.S. Both weakened with alliances and also potentially militarily, and having their credibility been bruised during this whole Iranian conflict. We've seen. It's noteworthy that she made these comments when the Spanish prime minister was there. Spain has, been one of the most countries who have been looking to keep an arm's length distance at this conflict, not allowing the U.S. to use some of their military bases in their airspace. We also saw overnight, just about 12 hours ago, sort of a feud start brewing between Meloni of Italy and Trump, another one of his key allies in Europe. So we're really seeing a scenario where, Trump has had a lot of fractured relationships on the global stage, and she has been able to swoop in the void there and really, play the elder statesman in the room.
Bloomberg Politics editor Laura Davison there. Well, the conflict is also casting a shadow over the HSBC Global Investment Summit in Hong Kong. The China Show's anchors Yvonne Mann and David Inglis are there and join us now.
Yeah, Heidi, it's going to be another day of big interviews from HSBC, day 2. We're going to kick things off with Ida Liu. She is HSBC Private Bank CEO, just really joined the firm a few months ago, back in January, after nearly 2 decades at Citi, and really talking about where she sees the goals moving forward here. Obviously, wealth is a big sort of pivot for them and a really big sort of growth engine for HSBC, especially in this part of the world. So we're going to ask her where wealth flows are, given, of course, the volatility that we're seeing around the Iran situation. What does that mean for headcount, given this whole AI, strategy has been deployed from the top down? And also, we're talking AI, too, Dave, today.
Perplexity joins us in about 30 minutes from now. So this is going to be an interesting conversation. Everything from what they're planning in the kitchen, this vision that they have of this refresh in search, and really just all this fundraising that's going on, and really how to justify these valuations. I'm sure they will. So we'll see what happens with that conversation coming up. Lots more ahead, of course, here on the Asia Trade. This is Bloomberg.
We have a classic energy price shock unfolding across the world as we speak. That, of course, will create demand destruction. It will cause economies across the world to decelerate. The risk of a recession has increased, and central banks are making some really difficult decisions. This really is a very, very treacherous moment for the world economy.
Citadel CEO Ken Griffin sounding a dire warning about the global economy if the Strait of Hormuz remains squeezed for the rest of the year, on a day where we are actually seeing the pullback in oil prices. We're hovering around 95 on Brent. Asia stocks are doing well. We're actually watching some of the gauges in the way in which they could be erasing the losses they've seen since the war, including on the Nikkei, where the banks are outperforming today. Nasdaq futures pointing to further gains as well. And of course, amid all this, the HSBC Global Investment Summit is entering its second day in Hong Kong. And our next guest was recently hired to run HSBC's global private banking business. And this comes at a time when the wealthy, family offices, they're taking a wait-and-see approach to their portfolios, perhaps amid the war. The China Show co-anchors Yvonne Mann and David Inglis are at the event, and they join us now.
Yeah, hey there, April. Joining exclusively is Ida Liu, CEO at HSBC Private Bank. Ida, it's great to have you. I know this is your first interview since you joined HSBC back in January.
It is, and I'm
only
so excited
a few
to be with you.
months, and after what has been nearly 2 decades at Citi. Just first of all, just line up what your vision is going to be at the helm now. What are the goals that you've lined out for the year?
Absolutely. So first of all, I couldn't be more excited to be at HSBC. We're here at the Global Investment Summit with 5,000 investors and clients from around the world in 50 different markets. So what a way to kick it off. And it's been a wonderful first 3 months here at HSBC. I've traveled to 100 different regions, visiting a whole bunch of different clients and customers around the world, and really having such an energizing and exciting conversations with our clients and spending time with our teams. It's been really energizing and invigorating. And I'm super excited about what we're going to do on behalf of our clients.
Yeah.
So 3 months in, pretty much you've kicked the tires and you kind of settled in. What are the specific goals this year for you?
So, David, there's so much that we can do on behalf of our clients, and one of the strengths of our business is our globality. We have one of the most global platforms and institutional-like offerings for our clients. So not only can we help our biggest and largest families around the world with their wealth management strategies for them and their family members, but we can also help their companies on the investment banking, commercial banking, and market side of the business as well. So this ability for us to deliver the power of HSBC to our clients is really profound, and it's incredibly unique, our ability to serve our clients around the world so seamlessly.
Can you tell us a bit more about the sentiment around your clients now, given the Iran situation is a day-to-day moving situation? What are they doing? I mean, what are they, in any way, redirecting wealth flows? I know we talked to George yesterday, and he said, look, it's quite benign what we're seeing right now. and they're still open for business in the Middle East. But have you seen any sort of redirection of flows?
So first and foremost, we've been absolutely focused on the safety and the well-being of our clients and our teams in the Middle East. One of the things that we continue to do with our clients in the Middle East is to serve as sound advisors for them, especially in times of unrest. And the benefit of having a global platform for our clients is that we're able to diversify for our clients as well. So when they do have needs for diversification, when they do want to go to other geographies, we're there for them. And we've been continuing to lean in to do that.
Are they coming to Singapore?
They are. We have seen some flows, although it's been very resilient, very mild. But again, in leaning into the diversification strategies of clients more broadly, they are absolutely looking at different regions, and Asia is absolutely one of them.
Yeah, and are we ready to accept those flows?
Yes, of course we are.
What are the conversations you have with your Asia team specifically, in as far as that specific conversation is concerned?
So, look, we're always trying to help our clients access different geographies and diversify. And, at the end of the day, our jobs as wealth managers is to ensure that we are building portfolios that are resilient, that endure the test of time, and that are aligned with our clients' objectives in the long term. So as long as we do that, it doesn't matter so much the noise in between. Of course, we'll make tactical adjustments for clients, but we've got to make sure that we're really aligning to the purpose and the values of what they want to do with their money.
And are they sitting in the sidelines with their money now? Are they looking at risk? I mean, what sort of, what's the risk profile of some of the ultra high net worth now in the face of all this volatility?
So the ultra high net worth clients are very sophisticated. They're very institutional-like. They're very globally minded investors. So they view these opportunities as opportunities to tactically make some adjustments in the portfolios. But we're not looking, they're less concerned about some of the immediate term impacts on the portfolio, more concerned about the alignment of long-term portfolio management and the ability to achieve their goals and objectives through the long-term investment philosophies.
I mean, there had been some challenging years in as far as exposure to the Chinese equity complex is concerned. I wonder how that's changed.
Well, it's interesting that you say that, David, because over the last few years, obviously the U.S. market has been incredibly strong with high double-digit returns in the last 3 years, up until now, but that's exactly the point. So now we're seeing the Asian markets really picking up steam, right? And you almost see like a change in direction of the momentum. So we're seeing very, very strong momentum in this region, continue to see strong momentum in the region. I mean, Hong Kong delivered 20+%, 25%, last year, and up high single digits already this year. And it is a global wealth hub of the world. So we're very excited about being here in this region.
And we've minted a lot of billionaires, new entrepreneurs as well.
Indeed.
Tell us a little bit more about this kind of tech 2.0 that we're seeing in China right now. And how are you kind of, what's the pitch to them to get them to maybe kind of invest through you and the like? I mean, what's their profile and what's sort of the trends that you're seeing in China right now?
So first of all, many of our clients rely on HSBC because we've been in the region for 160 plus years. So the deep roots with the families that we have here and serving multiple generations of families, by the way, and their companies in helping them navigate around the world has been very powerful. So a lot of clients in this region are relying on us to help them, right? Build their businesses, scale their businesses, help their family members, help them with their legacy and planning and so on. So just as an example, yesterday at the conference, I met a multi-generational family member that has family members living around the world. And we're helping them in the US and the UK. And then on the personal and the business side, on the banking side, we're helping them with commercial banking for their company, as well as helping them think about advisory for how they want to grow their business as well. So this comprehensive nature of what we're able to do for our clients, that is the power of HSBC.
Tell us who the family is. I'm kidding. So I was on stage yesterday with George. I'm not sure if you were in the audience. There was a question from the audience that came in. What is HSBC's plan in mainland China outside of wealth? And the way the question was phrased was almost that wealth is a given presence of HSBC. So let me just ask you, what specifically is the plan to grow in mainland China?
Well, the plan to grow in Asia is pretty fulsome for us here at HSBC. As I said, it is part of our heritage and our deep roots. Now, 160 plus years in this region, multiple family members and relationships across the region. And of course, as the wealth continues to compound and grow in Asia, we're serving as a key partner to them, not only to preserve and grow their wealth, but also to help them with the company strategies as well.
Some of the headwinds that we're seeing across this market, beyond just the geopolitics, has been what we're seeing in private credit, which I know is a big product when it comes to wealth clients. What sort of outflows have you been seeing from HSBC, and what are clients saying to you now?
So certainly there's a lot of market headlines about private credit, but there is still a place for alternative investments in private credit in clients' portfolios. Now, the key there is to make sure that we're working with the right managers, that we're making the right private credit decisions on behalf of our clients. So the diligence around it, making sure that they're invested in the right companies with clear liquidity exit plans and so on. That's going to be the differentiator, but that doesn't mean that we don't, include the asset class. It's an incredibly important one, and as you can imagine, our largest families around the world have a significant amount exposed to alternative investments, private equity, co-invest, direct investments, and the like.
Would you say the outflows have peaked, or do you think you're still hearing from clients that are looking for redemptions still?
There are definitely some clients that are monitoring closely the situation, as are we, but we're quite confident in the private credit offerings that we've provided to clients and what they have in their portfolios. Again, it's a differentiator of the diligence that we do and the right manager selection, the right strategies, the right investments, and the right companies.
Ida, thank you so much.
It's such a pleasure to be on.
For spending the time. Let's do this again. Next time you're in town. I know you almost live on a plane, so next time you spend some time on the ground, let us know. Down here in the city.
Thank you so much.
Ida Liu there, of course, CEO at HSBC Private Bank. Heidi, back to you.
Great conversation with our David Inglis and Yvonne Mann there in Hong Kong. We do have more ahead on the Asia trade. This is Bloomberg.
You have to look at, the price of the barrel, the price of the various categories of fuel, the price of futures, and all of that applied to gas as well, to determine where we are exactly relative to these two. But we are somewhere, I think, in between the baseline and the adverse scenario.
ECB President Christine Lagarde there speaking as we continue to get those negative views in terms of how the pass-through of the energy crisis, the oil shock, will feed through to global growth and inflation prospects. But for the meantime, markets seem fairly sanguine, pretty intent on pushing through with this risk rally, with volatility falling pretty much across the board. The S&P 500 closing near that record high on the renewed peace push. This is the picture as we see Euro Stoxx 50 futures looking pretty flat at the moment, as we did get a session of gains, I should say, for Europe in the previous session. There was optimism there about the end to the war as well. This is Bloomberg.
The closing of the Strait of Hormuz and serious damage to critical energy facilities in the Middle East raise the prospect of a major energy crisis should a durable solution not be found soon. Oil and gas prices have increased sharply, and so have the prices of diesel and jet fuel, fertilizer, aluminum, and helium. With the right policies, including a swift cessation of hostilities and reopening of the Strait of Hormuz, the damage can remain limited.
That was IMF Chief Economist Pierre-Olivier Gourinchas, and taking a look as well, of course, of oil prices and how they've been underpinning these inflation concerns. They've been showing that reprieve with Brent falling and sitting just below the 95 handle. We are, of course, watching WTI rolling from the May to the June contract, so keep that in mind. And of course, the attention is still focused on the Strait, where the US says that 6 ships were forced to turn around and re-enter an Iranian port during the first day of its blockade of the Strait of Hormuz. Let's bring in Bloomberg Oil and Shipping reporter Wei Lun Soon. Wei Lun, so we are watching the Strait. The blockade seems to be working. How effective do things look to you in terms of perhaps not escalating the situation any further?
Exactly. Thanks, Avril. So we are in the first day of the blockade, and what appeared to be an escalatory threat from Donald Trump is holding up peacefully as we can see so far. So 6 ships, according to the US, have turned around and appear to be heading back into the Strait of Hormuz with no escalatory or hostile maneuvers from the US side. This is quite unlike what we saw earlier this year with Venezuela, where they were seizing tankers. So the worst fears for now appear to have been allayed for the oil trading community.
That's not great news, though, for traffic through the Strait and the oil flows that we are hoping will come in and out. What's your sense of the extent in which we can actually anticipate that in the weeks ahead?
Right. So what effectively the U.S. is doing is allow a space for ceasefire negotiations to happen to proceed ahead without further hostile actions in the Strait of Hormuz. But you're right, because traffic is still almost down to zero through the Strait of Hormuz, and the longer that each day that oil cannot come out from the Persian Gulf means more shutdowns for oil producers, and we see more barrels disappearing.
And amid all of this, I don't think I've tracked tankers as closely as we have amid the Iran war, as closely as you have. Do we have any further intel on that?
So we have a story overnight from our colleagues in London that Tehran is considering pausing sending ships through the Hormuz Strait to avoid testing the U.S. blockade. Again, that can be seen as a sign of de-escalating tensions. But the flows through the strait are at almost nothing, and with only Iran sending crude oil shipments through. And that's about 1.7 million barrels per day, which is a small drop. And so we are still seeing redirection of oil flows to the Red Sea port for Saudi Arabia and also the United Arab Emirates. But that will not make up for the nearly 20 million barrels per day that used to go through the Strait of Hormuz before the war.
Wei Lun, great to have you. Thanks so much. Our Bloomberg Oil and Shipping reporter, Wei Lun Soon. Heidi?
Yeah, Avro, and of course that volatility from the war benefiting banks in some ways, and executives at Citi, JP Morgan, Wells Fargo warning though that an extended conflict in Iran risks blunting deal activity, even as Wall Street trading desks, I should say, notching record revenue for the first quarter. Clients navigating that turmoil. Let's bring Bloomberg's finance editor Adam Hay. So Adam, it's a two-sided sword, but for now, if you take a look at trading activity, obviously there are very obvious ways that banks benefit from that, as we already saw with Goldman.
Yeah, indeed, and the first quarter is playing out pretty well, isn't it? But what we did see with Goldman was that equity volumes were up and trading there was pretty strong, but they had a bit of weakness in the fixed income and the commodities trading. And what we saw from JP Morgan was pretty much a clean sheet of good results across the board, including in FIC. So I think that gave people a lot of optimism. And of course, Jamie Dimon's comments were quite key as well. Laying a very kind of sanguine view of a benign economy that's not really in too much trouble, despite, of course, him noting, the geopolitical issues, the war in Iran and those things. He's still speaking about a business environment that is incredibly well placed for his bank to make good money.
Obviously, one of the things that was asked was about private credit, and I wanted to take a listen to what we heard from Jamie Dimon on that.
There will be a credit cycle one day, and I think when there's a credit cycle, losses will be worse than people expect relative to the scenario. I don't think it's systemic. It almost can't be systemic at that size relative to anything else.
What do you make of that? Because so far in this debate, it's been very much retail versus institutional, right? Two very different tunes.
Yeah, but I think in many sense, what David Solomon from Goldman has been saying and what Jamie Dimon is saying there is from a similar hymn book. This idea of the credit market not really being in a point in the cycle, and the economy more broadly, where you would have kind of a structural weakness in a lot of companies coming to the fore, where you'd see rapidly rising defaults in private credit in some of these problematic areas. They're really trying to say that idiosyncratic areas are still worth watching, and of course, if the economy does take a little bit more of a move south, then we need to be aware of what's happening there. But what they're seeing, in books around those portfolios are kind of, totally manageable at this point in the cycle, is their argument.
Maybe even the bigger focus has been on the US consumer, the strength of the consumer. What did we hear about that, particularly from Wells?
Yeah, and that's the thing. You do have this backdrop where the consumer in certain areas is coming back a little bit. They've taken a little bit off the table in certain areas, but broadly speaking, the US consumers doing okay. And there's no indication that suddenly you have a huge collapse in sentiment or in spending, both from consumers themselves, but also from businesses. So I think that backdrop of how the economy is playing out speaks to a reasonably optimistic environment for the banks.
Bloomberg's finance editor Adam Hay there. And on the topic of private credit, Goldman Sachs private credit fund has raised $750 million through a bond sale on Tuesday. This is the second private credit fund to tap the investment-grade debt market this week. A source says a 5-year note was priced at 2.55 percentage points above Treasuries. The sale suggests a rebound in confidence in private credit amid these concerns about lending standards. April.
Yeah, Heidi, earnings also in focus when markets open in Hong Kong and on the mainland. China's biggest battery maker, CATL, set to report later, and the company is expected to post double-digit growth in first quarter revenue and profit, but growth in the US could still be limited by a shift towards local supply chains. So something we're watching in the session. More ahead on the Asia trade. This is Bloomberg. And of course, we're watching these tech names in the region as they propel the Kospi way past the 6K level. And I think we've pretty much erased the losses from the war. We're looking at fresh highs, the potential for that. Of course, yesterday we already saw that clinched on the Taiwan gauge. The chip stocks are doing well today. Turning back to the HSBC Global Investment Summit, where those conversations around AI productivity and application are front and center. And Perplexity, of course, this AI-powered search engine, has distinguished itself from the other chatbots by using LLMs to execute live search results. It also employs AI agents to do things such as shop online on the user's behalf. For more on this, our China Show co-anchors join us now.
Yeah, really a good time to be having this conversation because at the pace this company is growing, it could be a different conversation if you had this tomorrow. Joining us exclusively here on set, Dmitry, Shevelenko, Chief Business Officer at Perplexity. Good morning. Nice to see you in the region.
So good to be here. Thanks for having me.
So you guys are moving at almost lightning speed. Are you surprised by the pace of growth, and then how are you coping with this momentum?
Every day feels like a month. You have to drink a lot of coffee, but I think I wouldn't want to be anywhere else right now. And one of the most exciting things about working at Perplexity is we use our own product a lot. And so being an AI native company, we feel like we're living, 6 months to, 6 years in the future, depending on the industry we're being compared to, and viscerally feeling the types of new productivity that are possible. It's very motivating.
Yeah, you publicly, your CEO just posted about your annual revenue is about 500 million now, which has basically grown 5 times in a very short amount of time. Tell us what's driving that. I know you just launched this AI agent, Perplexity Computer. How does this tie into this whole rise in agentic AI now?
Yeah, so Perplexity Computer came out in February. We've been using it internally for about 2 months before that. And it was the biggest disruption to my professional productivity since the V1 launch of Perplexity, right? So if you think about the history of Perplexity, our first big innovation was taking the search experience and converting it from links to answers. And now we're with Perplexity Computer, which is basically a digital worker at your fingertips. We're going from answers to workflows. You now have a full team at your disposal working 24/7 of agents that can handle a very wide set of workflows. And it's directly driving not only our revenue growth, but just excitement about the nature of companies that can be built right now.
How do I categorize you now? Are you still, is it still search?
Google Chrome disruptor?
Yeah, like what's the, let it come from you.
So Perplexity is building the world's best AI orchestrator to deploy these agents and workflows on behalf of entrepreneurs, small businesses, medium-sized businesses, search will always be a core part of our DNA, because one of the most essential traits of AI is accuracy. And you can't have accurate AI if you don't have high quality, real-time grounding. And that's why search, particularly search of the public web, is so foundational to the success we're having right now. But we see such a big opportunity in transforming business workflows that's where we're focused on with 110% of our energy right now.
I think you were probably one of the first to really kind of have this live results sort of aspect to, of course, your models. And it certainly is interesting, right? Because it's the competition space has grown a lot, whether it's Gemini that's come through, also with live web results as well. And you look at all the big names like XAI, that's backed by Tesla. You have OpenAI backed by Microsoft. How does Perplexity look at the competition? And how do you look at scale now?
So what we do that is very unique is we orchestrate all the best AI models into one singular product. So Perplexity Computer has 20 different frontier models working for you. And depending on the task or need that you have, we'll actually use multiple models in that same workflow, all that are the best model available in the world at that time for your needs. And that's our right to win, is being the world's best aggregator and orchestrator. And we have no higher purpose than to just serve our users, right? So companies that develop foundational models, they're competing with each other on creating the best foundational models. We wake up every day and focus on building the best product for the end user, and that focus pays a lot of dividends.
So investors are trying to figure out what the best way is to participate in this AI wave, right? The picks and shovels, what have you. In a version of the world where you guys are extremely successful, what do you think the world will need more of in terms of hardware, energy, what have you, and everything in between? What does that world look like?
You know, I'm probably going to surprise you with my answer. The biggest constraint right now is how are companies driving adoption of these technologies? Because the dynamic you have right now is that 10% of your workforce is 100% leaned in. They're using everything that's made available to them, and they're using it at full power. Okay. But 90% of your employees, your most precious asset, they're using tools like Perplexity Computer only at a surface level. And so even if we have zero model progress, which certainly is not going to happen, just focusing on education and adoption, and that's why you're going to keep hearing from us at Perplexity this notion of workflows. How do we take the open-ended capabilities of they're very powerful and raw from Perplexity Computer and translate that into daily recurring workflows? Okay.
You mentioned about this hybrid model, right? You got 19 models, one for reasoning, one for writing, one for everything. With Perplexity Computer, what sort of consumption trends have you actually noticed ever since you launched? I mean, what are you seeing in terms of trends now?
So it genuinely evolves like every 72 hours because you have updates to these models, right? And so we're actually at the frontier of discovering what the best applied capabilities are of a new model release, because the model makers, they're all competing with each other. They don't actually have that much time with a model internally until they release it, because they have a bit of a zero-sum dynamic with their competitors. And so the answer to your question depends on what day of the week it is. But some patterns we're noticing right now is that the Claude Opus models are really good for planning. The GPT models are really good for writing. The Gemini models are really good for audio. I took my daughters, who are here also in Hong Kong, to see the giant Buddha yesterday, and I used Perplexity Computer to create a podcast just for them about everything they saw that day. And so it used GPT to come up with the words. It used Opus, again, for the planning, and then Gemini for the actual audio production.
Wow.
So it certainly, there seems to be a massive market for you, and clearly the numbers and the growth is proof of this. A market for entrepreneurs, small businesses, individuals. But how does a big company look at your service? How are you useful to these companies that have tens of thousands of employees? In what form are you useful to these companies of scale?
Yeah, well, I mean, I'll name one that is pretty familiar to folks following AI, which is NVIDIA. They've made Perplexity Enterprise products available to every single employee.
Okay.
And the reason they did that is their CEO happens to be a daily user of Perplexity and absolutely loves Perplexity Computer. And so what we're seeing is large organizations, even though there's more friction to adopting an AI solution, when the very top, when the C-suite themselves are daily users, that is accelerating adoption there. And that's kind of, the other fascinating dynamic is a typical enterprise procurement process is, say, in a good case, 6 months. Perplexity Computer did not exist 6 months ago. I'm confident that we're going to be talking about a product 6 months from now that also doesn't exist today. And so one of the really, novel dynamics is when you're selling into enterprises, the product suite that you have at the beginning of the procurement process is not what is the state of the art by the time it's time to deploy, right? And that is, that's a brave new world that we're figuring out how to operate through together with these customers.
That's wild.
What's the fundraising environment like now? There's been reports that last year you had to do back-to-back fundraising and with valuations from 15 billion to maybe even 50 billion in just a few months, which raised a few eyebrows. Do you think you're done with fundraising right now?
We're, we don't comment on fundraising. What I'll say is everyone that's ever invested in Perplexity, it's because they've been a diehard user. And so, our product is very much suited to the needs of many different types of investors. That's why I'm excited to be here at the HSBC Summit, because financial services is one of our key enterprise categories. And so we naturally have a lot of awareness in the investment community. So that makes the fundraising part of my job a lot easier than it would be otherwise.
Have you been ever approached to get acquired? Like, is there a price that makes sense to you that you would mean? That sounds tempting.
Yeah. Again, I don't think I would have kept my seat through this intense period if I commented on M&A. But we see again tremendous value in being the independent orchestrator of all the best models. Sure. Because remaining independent, it lets us provide that service in a way that if we're,
It's kind of like the weather service.
Yeah, you want to be Switzerland, when it comes to access to all the best models.
Yeah. What about when it comes to IPO? I mean, I know your CEO mentioned no plans for IPO before 2028. Given just the growth that you've seen, are those goals still the same, or do you think that this could speed up the whole going public sort of story?
One other thing I like to say about 6 months is one of the things I'm most confident in is that 6 months from now, I'm going to have a top 3 priority that I don't know what it is today.
Okay.
I think it's, we're living in unprecedented times. Every normal timeline for a company, is being accelerated. There's not going to be a Perplexity IPO this year, but I think it's not wise to comment too far out into the future because who knows how things might evolve.
Very quickly, do you worry more about your product or competition? Who is competition?
I worry more about us preserving our execution velocity internally as we grow as a company, right? And so we spend very little time thinking about competition. We spend a lot of time focused on how do we preserve the pace we're at, that we have? How do we avoid burnout for our top staff, right? Like, this is relentless. We shipped an update to our product every 48 hours last year. So that's, another stat we were talking about is we as we went from 100 million in annualized revenue to 500 million, we only grew headcount 34%. And so, how do we preserve that culture and that shipping velocity, and not kind of run ourselves into the ground?
Dmitry, we gotta leave it there. Dmitry Shevelenko there. Next time, I want to hear this podcast about the Big Buddha. What else you come up with during your Hong Kong travels? Chief Business Officer at Perplexity, joining us here at the HSBC GIS Global Investment Summit. Heidi, send it back to you.
Rudman and David Inglis, our China show co-anchors, they're at the HSBC Global Investment Summit in Hong Kong. We'll have more great conversations out of the event over the next few hours. TWG Global joins us to assess the impact of the Iran war on energy markets. That conflict also be in focus with our discussion with HSBC's Asia and Middle East co-CEO David Liao, plus talking exclusively to London Stock Exchange CEO Julia Hoggett as well. Those exclusive conversations are all coming up. More ahead on the Asia trade. This is Bloomberg.
Taking a look at Taiwan futures, looks like it's going to be a good day. The extent in which Taiwan's gauge builds on yesterday's record will be in focus on a day where big tech in Korea also doing well. Watching Samsung SES as it ties up with KKR, double-digit gains in the stock as well. That's it from the Asia trade.